Welcome back. It is June 10th, Monday, second week of the month. And the title of today's video is How to See Past the Noise. With Gamestop and Fomc coming up this week, there's a lot of emotion in the market, you could say. And what that may cause is high volatility, but it may not necessarily move the market as far as from the larger balance or from the current place that it's trading at, or current range that it's trading at. So you always want to maintain perspective. One of the best ways to maintain perspective, or one of the old adages that I've heard is, when in doubt, zoom out. Right. And something that I like to do every single day, and something that I picked up from Jim Dalton, is I zoom out to the monthly chart. This helps me maintain perspective and kind of keep my eyes uh, on what's happening right in front of me, keep my ear to the ground to see if anything's happening behind the scenes, and also gives me a little bit slower look at the market, which helps you slow down a little bit, because a lot of people's issue, I think, when it comes to markets like this, is over trading. And so one of the best things you can do is kind of zoom out, slow down, trade less, trade smarter. So let's do what we always do and jump out to this monthly chart. And as we can see here, we are sitting right above that previous balance. You can see we're trading a little bit higher, 30 or 53.46. That Friday's close, 53.55. So we're trading just about 10 points below it. Still trading inside the previous month's range. Right, that previous month's high, 53.58. That's that key level we want to be paying attention to. Should we get above that level, then their opportunity for more continuation is higher. The probability is higher, right? Above the previous month's close as well, another level that we want to be paying attention to, 52.95, about 50 points lower than we are right now, but still another level that we want to be paying attention to. The monthly is in a balanced breakout mode, right? Trying to break out to the upside. So we want to be kind of paying attention. Is this market going to continue? Is this market going to break out from this balance? It is at all-time high, so it's very hard to kind of project where it will go, or where the target is. Of course, you could use some advanced options levels to help you find that, right? And if we were to try to do that, we could look at daily options, right? If we were trying to find daily levels to possibly help us kind of gear in on what we think the market's going to do. If this thing ever loads, it's Thinkorswim is just being extremely laggy today. Let's see if we go here. Oh, it's because we're loading all of them. So let's go ahead and let's do 50 strikes. We'll go back to our options. And so we can see, based on the options, right, we're looking for these high volume options. You can see a lot of options trading around here, 54.10, another, big load of options trading 54.20. On the put side, you've got 5300 looking at support, even that 53.40, a lot of puts trading there. We can kind of look at the option chain to see the current day statistics, and you can see calls trading at the bid. A lot more trading at the bid, which would mean a lot of people are selling calls. A lot of puts trading at the ask, which means a lot of people are buying puts. So you got people selling calls and buying puts. That's kind of a down positioning. So maybe that's something that you want to be kind of taking into consideration, that there is maybe a possible negative skew in this market. Switching over here to the weekly, we can see that weekly remains in balance. We're trading almost above that previous high, right? That's that 59 that we talked about, or 58 quarter. Excuse me. Last week we ended just another week in balance. We ended up very close to that balance high, so it continues to be a very key level, right? We could even say 53.50, but we are saying 53.58 just for argument's sake. As long as we remain above this close, which was 52.95, the market still seems like it wants the long side. Below that level, the market starts to get a little bit slippery and possibly could draw in some selling, as we've seen people sell from this level before, right? I'd really like to see the market stay above this 53.20. That would be a real sign of strength. I think 53.28 is what we talked about last week. So anywhere from 53.28 to 53.20, I think the market does have a good chance to continue its upward momentum. Below that, maybe we start to get back into a chop as we start to creep back into this longer term balance, right? As you can see, like 4 weeks of balance here. Now, switching over to the daily, we can see we're basically in a 3-day balance, and when we zoom out, we've got this much larger balance here. That's something that we want to be kind of paying attention to. Remember, we had these 10 days here, and then we got this kind of look below and came back in, and now we're kind of balancing at this high. So we really want to be paying attention to is, are we going to get acceptance, or are we going to find some new buyers, and are they going to propel the market up, or was this a rejection, right? This is one of the first wicks that we've had towards the high that is made in the cash session. A lot of times when we make those, it's possible for that rejection. We're trading very close to it, so it's really hard to just call it right now. So it's just not something that I do. I just really don't like to call the top. So some key levels for today, right, are going to be yesterday or Friday's close, which was 53.55. We're trading about 10 points lower than that. And then the low being 53.41. You do have that 5 SMA below there on the daily, trading 53.37. And then you've got a couple other moving averages down here, trading kind of in the middle of that previous balance that would act as support should the market break, right? Those are a little bit lower, 53.16 and 53.06. So real strong. If we stay above this 37, a little bit more choppy and weak as we start to drift lower. Now, let's switch over to the profiles here and get a little bit better look. We could see that settle from Friday was 55. So a little review from Friday, right? Friday's session pretty much opened up. We started to just rally up. We got a little bit of news. Market started to rally up. Looked to get some excess, right? First time we really seen some excess, some clean excess on the high, and just kind of fell back into range. No real follow through on the selling. A little bit mechanical, if you ask me, just based off of how how the move down kind of went. So something key to watch, and something I always like to do because it gives us a little bit of a clue, is we've got these Brad prints here. So you've got a little bit of a liquidity zone up here. And if we see some strength, that should be the target, or it should be the area that the market is unable to reach and connect as a little bit of rejection. So you can see we're trading in the balance high. We drag this drawing over a little bit. You can actually read it. And so overnight inventory, for the most part, net short, I'd say about 90-10. And what we want to look for today, or what I'm going to be looking for today, is can we reclaim that settle and get above that prior month's high? Really, that's where the strength is going to come in, excuse me. And that's where I'm going to be looking for that long setup, if the market can hold up there. Now, there will also be, in the same breath, an opportunity to fade from this area, should the market not be able to reach this area. So we can go ahead and jot that down. Let's say fail to trade the 70, we'll call it 76, say 53.76. may result in a liquidation. In a liquidation. Okay, so you just got to be careful for that. Not that I'm just going to be blindly selling that, but what that would look like, right, is if the market starts to move up and it's not real strong, the tempo is real slow, or we move up here and then the market starts to kind of chop sideways, there may be some stabs at shorts that you may look to try to fade back towards that prior month's high, or towards the settle. Now, because we're opening below, this is kind of an interesting look, um, or kind of a tough situation, just because I think this may be a possible buy zone down here. And should the market hold it, there will be probably some opportunity for the market to carry on higher. And so this would be more of a cautious long area. Yeah, so I'm just trying to kind of figure out how I would want to play it. Basically, what you would be looking for is with strong rejection. So you'd be looking for a just basically one tap that takes you back up to the high. So for a one tap to get on board. Below that, it starts to get a little bit weak, right? The market starts to look a little bit weak, and then possibly starts to target some of these areas lower. You've got that 53.16, which is that prior week's half back. That's an area where you could see some buyers, but there's a nice possibility from 28 to 16 to catch a little bit of momentum. And then you've, of course, below that, you've got that 5,300, which is basically the next big level down, and an area where we're going to have to readjust from. The real key level besides this 28, I think, is the 5,280 being the biggest support this week. Because basically below that 5,280, the market loses the momentum to the upside, right? And the market will start to maybe chop around or even catch some downside momentum as it starts to slip below that 5,280, or if it does slip below that 5,280. So we've definitely got to be cautious about that when it comes. It will be more of a reevaluation, more than just like a close your eyes and sell type situation, just because it's summer, and so who knows. But we do have some, a lot of news going on this week. Like I said, everyone's kind of turning their computers back on because of the whole Gamestop situation. And then on Wednesday, we have our good friend Powell coming on. So got to be vigilant and patient this week. But other than that, you guys have a wonderful day. Make sure you're managing risk and sticking to your trade plan, and I'll see you guys tomorrow.